Imagine waking up one morning to find your entire investment portfolio has been wiped out, thanks to a single bad bet on a trendy tech stock. That's the nightmare scenario the Bank of Korea is warning about when it comes to single stock leveraged ETFs tied to giants like Samsung Electronics Company and SK Hynix Incorporated. According to a recent report, these funds could amplify market volatility, exacerbate one-way trading flows, and deepen market concentration, making the entire system even more fragile. This matters because leveraged ETFs are designed to deliver amplified returns, but they can also amplify losses, and when you're playing with fire like that, it's only a matter of time before someone gets burned. The Bank of Korea's warning is a timely reminder that even in the pursuit of high returns, investors need to be mindful of the risks they're taking on, and that's especially true when it comes to complex financial instruments like leveraged ETFs. So, what's the takeaway from this story? It's simple: do your homework, understand the risks, and don't bet the farm on a single stock or sector. Now, let's shift gears and talk about a very different kind of investment opportunity, one that's all about building bridges between nations. In a meeting with Swedish business leaders on July 4, China's Foreign Minister Wang made it clear that his country is eager to deepen its ties with European businesses, and that's music to the ears of investors who are looking for new opportunities in the region. According to Wang, cooperation between China and European companies will benefit all parties involved, and that's a win-win situation if ever there was one. This matters because it suggests that China is serious about expanding its economic footprint, and that could have far-reaching implications for global trade and investment flows. Now, let's turn our attention to a market that's been quietly gaining traction in recent weeks: India. After getting left behind in the global AI rally, Indian equities are once again on the radar of investors who are looking for a safe haven from the latest market turmoil. This is a fascinating story because it highlights the shifting sands of global investing, where yesterday's laggards can quickly become tomorrow's leaders. So, what's driving this renewed interest in India? It's all about diversification and the search for value in a market that's been unfairly overlooked. In other news, the Treasury Department has just weighed in on a question that's been on the minds of many parents and investors: what to do with the money in those Trump accounts that are designed to help families save for their kids' education expenses. The answer, it turns out, is to invest it in low-cost index funds, and now we know which specific funds are on the table. This matters because it's all about giving families more options and greater flexibility when it comes to saving for the future. Finally, let's talk about a story that could have a major impact on the global economy: the latest developments in the oil market. According to reports, OPEC Plus has reached a preliminary agreement to increase oil production by 188,000 barrels per day in August, and that could be just the beginning if a US-Iran peace pact takes hold. This matters because it suggests that the oil market is slowly but surely coming back online, and that could have far-reaching implications for everything from gasoline prices to the broader economy. And that's all for today, but tune in tomorrow when we'll be exploring the surprising ways that climate change is starting to shape the world of finance.